spaces, I always chime in because I enjoy your views and your
No,
analysis
Boris.
and
So
your
honestly, I did this. I told people I think the sector needs a new narrative, and it can't be safe or bust. I hate that narrative. Um,
yeah.
I think the sector needs a new narrative. And I was asking people at Benzinga, I'm like, what? I was asking for input, and I just kind of, I actually spent 2 hours today talking to an institution. They actually are a shareholder of yours. They actually, and again, this is like a data point. They haven't been able to buy any cannabis stocks for over a year because the custody changed, but they still have their current positions, and they're not selling them, and they're especially not selling them after an 80% drawdown. But they can't buy anymore because their custody changed. But anyways, but I'm glad you jumped on. Happy to have you give some input here.
Yeah. So listen, I'd like to. There's a couple of things I'd say. The first, for everybody, I can understand the frustration of the participants of this particular spaces, but actually everybody that's been investing in this space. This has been a trying time for the industry, and it's been a trying time to be an investor in the industry. And again, I want to stipulate the difference of what I've said many times, and that this is not a trader's market. And I know a lot of people talking about selling, buying the dips and selling the rallies and doing all that. And listen, that's great, but all you're doing is paying a lot of capital gains taxes, and you're not making a lot of money because you can't really do it in any kind of size. So it's really small stuff. And I really think that cannabis is a long term story, and it's an investment story. It's not a trading story. I know some people like to trade markets. I myself am not a trader. I'm an investor in markets, and I find I've read everything Warren Buffett and Bill Graham and people like that have written on investing, and the best thing you can do is buy the stocks that have real great value and have really great potential and have really great management teams, and hold on to them, and potentially hold on to them forever. And that's what's made the biggest fortunes in the world. Yes, certainly there are people that have made a lot of money trading, but you'll also see that a lot of the great traders are now getting their asses handed to them in the markets. And some of the biggest names, I'm not going to name them, but some of the biggest hedge fund names in the world are getting absolutely slaughtered this year, because they made they over leverage. They have massive margin calls. They're playing macro games, and they're also hedging. The hedges are going the wrong way, and so my approach to these things is that I look at this sector as, wow, I've got an opportunity to buy these same shares at even a lower price. And I'm not giving anyone advice. I'm talking about what I do as an investor. And I have allocated, $60 million since January. I think I said this, Toby, to buying cannabis stocks since this January. Okay. And I'm very bullish on the sector still. I remain bullish in the sector because I believe it's a long term story. But I will say that I have not been buying, what you'd think that I might be buying. I haven't been buying some of the smaller companies because the dynamic in the market right now is actually quite dangerous for those companies. And that is that if we do not get safe, first of all, safe doesn't solve bad management and doesn't solve the problem of poorly run companies. Safe will bring down the cost of capital, and it will allow people to potentially survive a little longer. But the bad companies are still going to eventually die or get taken over. So safe doesn't solve the problem of poorly managed businesses, and there's a lot of very poorly managed businesses in the sector. Um, the other problem is, unfortunate for those companies that got involved in the sector a little bit too late. They haven't gotten to scale, and the cost of capital has gone up dramatically. I'm going to tell you that I know of a deal that's about to get announced for a top four, top five MSO that's going to be financing themselves in size, and I hear the cost of capital is going to be around 16%. Right, and that's a top company. So if you can imagine, if a top company is borrowing at 16%, yes, they're going to announce a lower interest rate like 13. But the fact EBITDA margins, and so they're not converting a lot to cash, which means that they're likely to have problems servicing their debt. Their lenders will probably extend, and we're seeing that now in the sector that lenders are extending their debt, but they're extending it on egregious terms. And so there'll be dilutions, there'll be other things. And so investors, and I'm speaking now as an investor right now, not as a Curaleaf manager, right? I'm strictly speaking as an investor. Investors need to be very careful and do your work on the companies that you're picking in the sector, because there's no question there will be winners and there will be losers. A couple of years ago, everybody was a winner because these things traded on enthusiasm and on legalization issues. So every company could win. But right now, given where we are, both on the macro side and on where cannabis is in its cycle, it's very dangerous territory to be in the wrong companies, because I think if we don't get safe, I think you're going to see a tremendous amount of companies closing their doors and folding shop in the first and second quarters of next year. So I think that's a very, very important point. And the reason they will is because they need to get to scale in the state by state situation. And getting to scale in a state by state situation requires a lot of capital and time, and that's something they don't have. They don't have the capital today, and they don't have the time to get there, because a lot of these people have refinancings coming up. And so I think it's very, very important to be careful, but there will be winners and there will be losers. And the winners, I have to say, and the reason I've been allocating capital to the sector is the winners are going to be big winners, in my opinion, because I'm absolutely confident that 280E will go away. I'm absolutely confident that a Safe Banking Act will get passed, and I'm absolutely confident that this sector will become mainstream in terms of its consumer offerings, and the sector will continue to grow as we add more states, as we get into new countries. These will come, and then what will happen is, even in these states, Toby, that you mentioned, that have pricing pressure at the moment, and it's a real double whammy right now, because it's not only pricing pressure, it's also the macro effects of inflation on the consumer. So the consumer has less money now, and we haven't even gotten to the stage of the recession where people start losing jobs, and that's going to happen. We all know that. So you're going to have people losing jobs, and you have inflation. So the consumer is getting hit. In addition to that, some of these states have been slightly overbuilt, so there is pricing pressure. But again, who are going to be the winners in that situation? It's not going to be the smaller companies. It's going to be the bigger companies that are going to be the winners, the ones that don't have refinancings coming up, that don't have to raise capital in a current environment, and those that are going to be focusing on cash. And I think what you're going to see over the next 2 or 3 quarters, while we're in this macro situation, is you're going to see companies, even large companies, not focus on growth, but focus on cash generation and margin. And I think that that's what you're going to see, over the next 3 or 4 quarters from companies. And so expect, earnings to be more flat in terms of revenue, and expect margins to expand, because that's what people are going to be focused on out of the top companies in the marketplace.
Yeah, look, I think that's I firstly appreciate you chiming in as always, and I think that's super helpful commentary. Let me ask you this. I didn't ask you this at Benzinga, but I asked another tier one CEO. We had lunch and we had a kind of not a debate, but I asked him this because he was describing, look, cannabis, it follows this kind of boom and bust cycle, right? Like capital comes in, it's allocated to all these companies out there, right? Large
Yep.
companies, small companies, startups, and then there's a bust cycle. And I think, and again, I've only been following the sector for about 2 years, which it feels like 100 years now in cannabis. But I think that what I'm realizing, and you put out this message, and I think many companies have been realizing this, which is why they're all trying to get to scale, is that you just cannot, in the current state of affairs, right, with a massive illicit market, loppy enforcement of the illicit market, depending on the state, but especially with all the massive regulation, like California is legal, but you can't like open stores in half the state. And then with 280E, like all this regulatory burden, all this regulatory sort of, this whole push for social equity, and then capping licenses because we don't want to have companies of scale. All this regulatory burden is creating a situation where it's just really hard for most companies to operate in this space and to actually present a business model where it's a sustainable business. So I actually asked this other tier one CEO. I said the next, like, if safe passes, like when capital flows back into the sector, I want to see the capital allocated to the best companies. But he was like, well, no, usually doesn't happen like that. People will still toss money at the small companies, et cetera. But just, I mean, again, I go back to those two key questions I was asking. Like, is this a good business model, or can it be a good business model? And then when can these companies be traded in an efficient market? Like, how do you what are your views on that? I mean, is this the current regulatory structure? It just seems like it's not great for companies. But at the end of the day, you're making a bet that things will change. I'm glad you said you think 280E is going to go away at some point. You're all making the bet. We're all making the bet here, if you're investing in the sector, that there will be positive changes over some period of time. But obviously, the most important thing is you need to be backing the companies that can see their business through until that period. But what are your thoughts on that?
So Toby, this is a great question, and I've got a couple of things I want to say. The first thing I want to say is take a look at the BAT investment in Germany. Okay, so BAT just invested, I think, $35 million into a German company, and I took a look at that deal, and as you guys all know, I just bought a German company literally in the last 3-4 weeks. And if you take a look, the German company I bought as like a 15% share in that market. These guys have like a 1% share. Be, on the basis of the same valuation, I bought my company for 35 million. BAT paid, I forget, 200 something $1 million for the stake in that business. On the same, if you valued the company I just bought for 35 million, the same basis that BAT valued their company, my company should have been valued at 600 million euros. Okay, and I paid 35. So that just shows you the incredible interest from strategic investors into the sector. They are prepared. They bought a company at the same time I did. I bought a better company, a much bigger market share company, a branded company. I paid 35, they paid over 200. And if my company was valued on the same metrics as they valued their company, the company I bought for 35, it was worth today already $600 million. And the point I'm making there is not that I think that either theirs is 200 or mine is, it's a big bet, is there is a lot of interest in cannabis from strategic players, and they're prepared to pay significant premiums to get into the sector because they know Germany is going full federal legal, right? So that that should make people comfortable that as we move in the regulatory environment in the United States, we're going to see deals 10 times bigger than that because the US is so much of a bigger and better market than Germany, to be honest, even though I think Germany is going to be a terrific market, but we're just that much bigger, right? Because we're Germany's 82 million people, we're 360 million people, right? So the United States generally is a much more dynamic market than almost any market in the world. And so, from that perspective, people should get excited. Now, to talk to you about the regulatory impediments. Now, obviously, I thought by now we would have a lot of these impediments out of the way. But I'm going to go back to my original. This is my Boris Jordan's original investment thesis and why I got into cannabis. When I look at investing in anything, I look at two major things. One is I like high barriers to entry, right? I don't want, because if anybody can invest in the sector, if anybody can get in, it's harder to make money. So that's my first thing. This is my investment. So I like high barriers to entry. And two, I like businesses that you can scale. If this market, the US market, didn't have all these impediments, the cigarette companies, the alcohol companies, everybody would have already controlled this market, and there would be no way to play this except through those big, major market cap companies. There would be no cannabis, pure play opportunity. So look at it this way: there's a pure play opportunity because these impediments were put in place. And because people have been able, with these impediments, build these great big businesses that are, frankly, difficult to manage. You're right, Toby, that have a lot of negatives in them, like 280E. But we had the capability of building these things. And we know that the genie's out of the bottle. So it's a question of time. it's a question of time when you're going to get this big reevaluation as we move towards legalization. And what we've seen in states and I think at the federal level is once they pass a law, no matter what it looks like, everybody here is talking about is safe going to have uplisting, is safe going to have this? Who gives a shit? If we have a federal law that recognizes cannabis, that's it. That's it. It's game over, right? The door's open. Even if we get Republicans in the next administration, what do Republicans do? They reduce taxes. They're business friendly. So we need to get a law through at the federal level that recognizes cannabis as an existing business. And by the way, I'm not as negative as everybody else is about what nobody knows what's in this law yet because the law is still being kept in committees and with the writers of the law very secret. And let me tell you something. Everybody and their mothers in Washington right now working with people there to get this thing through. I had numerous meetings today only on safe banking and on New York. I met with the New York regulator as well. So I can say that a lot of work is being done, but I'm not betting the shop that this is either going to happen or not happen. All I'm saying is we wouldn't even have this sector to invest in if we didn't have these barriers to entry because all the big players would be in it. I can tell you right now, Philip Morris is spending millions on research in cannabis. They've bought pharma companies in Europe on purpose just to do R&D in cannabis. We're talking to them about joint R&D projects in the area of cannabis. They all want to be here. British American Tobacco, Japan Tobacco, Altria, Anheuser-Busch, Largenitis, which is Heineken. All of these companies want to get into the sector. There is no question about it. And there's going to be big dollars deployed. And my bet is, even if SAFE isn't perfect, going to get passed, they're already going to invest because what are they all waiting for? They're only waiting for one thing: safe harbor language and guidance from FinCEN, which will basically say to people, you can operate in the sector. We had the Cole memo. Cole memo wasn't even law. When Sessions under Trump revoked the Cole memo, that wasn't even a law. That was just a memo from the DOJ. The DOJ is not allowed to make law. The DOJ can only, issue a memo saying how they feel about a certain law, or they can enforce law, but they can't make law. Only Congress can make law. So another Cole memo would do nothing. But even under that Cole memo that we had, FinCEN, which is the Department of the Treasury, gave guidance to the big banks to cover that they could operate in the sector. We had Bank of America giving custody. We had JP Morgan doing custody. We had Pershing doing custody. Bank of New York doing custody. We had everybody, Goldman Sachs, everybody was involved in the sector. And that wasn't even a law. That was just a memo. Now, can you imagine if we get a law, a federal law about safe banking, and FinCEN gives the same guidance that they gave for a memo to the banks? You can imagine how this market's going to explode. So, and by the way, it will take time. It's not going to happen overnight. Yes, speculators will take these stocks higher, but what will happen, and cost of capital will fall. But, just like it took the money center banks 2 years after, or 3 years now, after the Cole memo was revoked to get out of the sector, it won't take them 3 years to get back in because they typically get back in faster than they get out because they want to do business. But it will certainly take them 6 months to a year to get back into the sector because they're going to have their lawyer. FinCEN will issue guidance, then they'll have to have their lawyers issue opinions, their compliance go through it. It will take them to some time until they get involved. But the point is that I personally think first of all, as everybody knows, I'm reasonably bullish that we're close to getting something done in Washington. There's no guarantee. I want to make everybody point. There's no guarantee. But I've never felt like this before. I know a lot of people say I've said that before, guys. I work on this all the time. I've been saying to everybody, I think we're going to get something in lame duck. I actually think. Now, we may not, and I know everybody's going to want to slaughter me for that. But, guys, I'm an optimist. That's the way I operate. And I probably spend, Charlie Bechtel and I probably will spend more than any other CEOs on lobbying in Washington, D.C. So I think both of us have the same view that we both think that we're closer than ever in getting something. But I want to specifically say it's not the law that matters. It's the recognition by the federal government that this is a sector in this country, because today we have no recognition from the federal level that this sector even exists. And that's why it's important that we get something like this passed. But I just want to summarize what you asked me. You asked me, is it a tough sector? It's very hard, Toby. tell everybody it's like waking up in the morning, having your ankles tied together, your hands tied behind your back, and you're told you have to run a marathon. That's how I feel every single morning. Is it frustrating? Absolutely. Is it the most frustrating investment I ever made? Absolutely. I've been in this now for almost 9 years. I'm very frustrated about the progress at the federal level. I'm actually very happy about the progress at the state level, but I'm very frustrated at the progress at the federal level. And that's why I'm very, very focused on it. And that's why I went to Europe, because I see that in Europe, the governments are much more pragmatic about legalizing cannabis than they are here in the United States. But I do think we're going to get some activity here over the next ensuing months. And I think that the Republicans love to reduce taxes. So I think I'm very comfortable working with the Republicans on 280E. I think that that's something that we can get done at some point in time if they take control. There's no guarantee, but if they take control of the House of Representatives, I think taxes is one thing that they will look at. So all in all, listen, it's a tough market. It's very difficult to operate in this market. The state to state model isn't ideal because the capex is so high in the model. But look at even Germany now. Germany realized that they're signatory to a couple of treaties that stops them from actually importing from even European countries into Germany. And so the only country they can import from right now is Canada, because Canada has already gotten out of the treaty issues. They've already resolved that issue with the UN, and it takes about a year to get that done. So Germany wants to actually launch their adult use program, maybe even at the end of 23, not early 24, because they're very anxious to get it going. And they're saying, well, it'll have to be either come from Germany, the cannabis, which there aren't any grow facilities in Germany of meaningful size, or from Canada, or from any country that's already removed itself from the EU Convention on Narcotics. And Canada's done that. Uruguay's done that. There's some other places. I don't know whether Colombia's done it, but they can import from the countries that have gone through the process. The EU has not yet gone through that process, and it'll take some time for EU to get through that process, probably a year to a year and a half to do it. But the Germans are so anxious they want to even launch earlier, so they're looking at where they can import cannabis to get the program operational in their own country. So we're seeing very, very good activity in Europe in respect to this. The U.S. has just got this stigma in Washington. It's a bunch of white guys with gray hair that are very well funded by pharmaceutical companies that continue to press on them not to get this done. But I think at this point, I'll be honest, I think even McConnell's like, fucking get this done so I don't have to deal with it if I win in the election. Literally, that's what I've heard him saying, that he's been saying recently. He's like telling his people, guys, let's just get safe out of the way. The banking lobby, which is very pro-Republican, wants this. Let's just get this out of the way. So if I become majority leader, I don't have to deal with this in my Senate. So, I mean, take it for whatever it is, but I think we're pretty close to getting something done.
Hey, I guess I want to go back to something you said you said you're happy with the way states have handled it. You're unhappy, at the federal level, but you're happy with states. But I just want to clarify, like, you mean like the fact that states are legalizing, because I guess I wanted you to comment. I want you to comment on just it does seem like different states, like some of the regulatory burdens is just so high in certain states. Like you yourselves have de-emphasized California, right, for
Yeah,
now,
yeah,
because of the way it's playing out. Like New York, I will tell you, right, and definitely, I know I think you had a meeting with someone in New York or whatever, but like New York, 6 months ago, people were thinking, okay, New York's going to be this massive catalyst for the MSOs. Then it went to like people thinking it was neutral. I actually have been arguing that people have been betting negative value in New York because they're not sure if New York's going to be a good market, and they don't want companies to destroy capital by investing in a market like that. So can you just
yeah. So
talk about,
let me address that. Let me address
the
that. So I'm going to
different
address
yeah.
this question. I'm going to address first as Curaleaf. So I'm going to tell you. So for you understand, for Curaleaf, New York is a terrific market. We supply 50% of all the cannabis to every one of our partners or competitors, or whatever you want to call it, in New York, right? Because nobody built out. We did. We've got the cannabis and the products, and so it may be our most profitable market on a margin basis in the United States. So for Curaleaf, New York is a great market. So let's just start with that. So even if medical lasted another year, I'm delighted because I'm making a lot of money in New York, and I continue to build my brand, and I'm very happy with the positioning of Curaleaf in New York. So that's issue number one. And it literally, I think I may be, yeah, I think it's actually a better margin than even New Jersey for Curaleaf in New York. So it's I think we got like an 85% gross margin and like a 65% EBITDA margin. It's just nuts. Now, obviously, it's not as big as we'd like it to be because it's just medical, but it's a good market for us. Now, on the adult use, so I did meet with regulators, and I will tell you that I think that we're going to build a constructive dialogue. I think we're turning a leaf, and I'm hopeful that we're going to build a constructive dialogue with the New York regulators. I specifically asked for this meeting. I did have a meeting. I'm not going to go into the details of it because these things are confidential. But I can say that I think we heard each other, and I think we're going to create a dialogue, and I think we're gonna get to a good place. I think it's unlikely to be an early 23 launch, but I think it's a 23 launch. So I think it's going to be a big catalyst, and it's a big market. And I can tell you that the New York regulator wants to see a thriving cannabis market in New York. That's for sure. And I think we've turned a leaf. And there's a lot of rumors out there. There's a lot of things being said about the MSOs. I had a very, very positive feeling. It's no guarantees yet. It's a first shot, but we had a very constructive dialogue, and I think that New York is going to be a good market for the MSOs. And I just wish some of the other MSOs would do some of the work that I'm doing on this stuff in all these states. But you want to be a leader, you got to lead, and that's the way I look at it, and that's why I'm trying to be a leader in this segment and trying to talk to the politicians and the regulators, get everybody on the same page. And the reason I said I'm comfortable with these markets is, listen, every year these markets liberalize. They start as very bad programs, and then they liberalize. Now, yes, we have places like California, but California can't get anything right. Sorry, Toby, I know that's your home state, but they can't get anything right. People are running out of San Francisco. They're running from LA. I mean, the state is just in shambles, right? And I think that I think maybe in the midterms, hopefully in the presidential election, people realize that this no enforcement and letting crime go rampant is a bad thing. And I think that we need to start having enforcement. And what Khadijah, who runs used to run the CSR for Curaleaf and now runs the USCC in Washington. What she said was exactly right. She's an advocate, a black lesbian woman who was a big cannabis advocate, and she said it very well when we had our meeting with the MSOs at Benzinga about Washington. She said we all have to get on the same page, and it's not only the companies that need to get on the same page. The social equity people, everybody needs to get on the same page to get legislation through. And for the first time in years, I'm seeing both the social equity people and the cannabis business people getting together and pushing this, excuse me, in Washington. And I'm very encouraged by that, because even if it doesn't happen now, the fact that everybody in the cannabis world is uniting to get something done is going to be a very, very powerful instrument. I mean, we've been divided up until now. We've had half the people yelling that, we don't want the business, we want this, we want that. Now, all of a sudden, everybody's coming together and saying, hey, we understand we need this because we're seeing where cost of capital is going. We're seeing banks shutting down custody. We need to solve this problem. Let's all get together and solve it because it's good for everybody. And the problem is we shouldn't allow people to divide us in this industry. We should work together to create a really, really diverse and really, really great industry. And I'm very, very happy to say that people, for the first time, are working together. Really, only in the last month I've seen this happen, and I think it's just gaining pace. And I think these states, and getting back to the business side, I do think that what's going to happen if we don't get safe, or even if we do get safe, safe's not, as I said, it's not going to save the poorly run companies. I think what's going to happen is, as some of these medium and smaller players start to face difficulties, what's going to happen is, the states are going to have to make a decision. It's unnatural not to have consolidation, right? These industries, every industry in the United States eventually consolidates. You have craft brewers, You have small alcohol. I mean, after Prohibition, there were literally thousands and thousands of alcohol companies. They all got consolidated eventually into the bigger companies. That's a natural process, and I think that's going to happen in cannabis. And what the regulators are going to be faced with is basically we're going to come to them and say, guys, either these businesses shut down and thousands of jobs are thrown out, communities lose their stores, or you're going to have to allow us to consolidate. And my view is consolidation is going to be approved by most of these states. They're going to lift these artificial barriers, and they're going to allow companies to start having a dialogue and consolidating, because it's not natural to have, you know, there's no economies of scale, and sure there's small stuff, but we saw this happen in the pharmacy industry. We saw, I mean, in almost every industry in the United States, we've seen this kind of consolidation happen. And sure, there's short-term pain from it, but long-term, you get better businesses out of it with safer products, better tested products, and products that can be delivered to the consumer. And there's always going to be a place for small craft growers that do it in a much better form than some of the bigger companies. There's always going to be a place, and they're always going to do well. But what I'm talking about is not those players. I'm not talking about the quality operators. We've got a lot of them in California and other places. People are always going to buy those products. I'm talking about the small players that don't produce a good product or that haven't gotten to scale. That's the part of the market that I think is going to get consolidated.
Yeah, I know you kind of you've been talking a little bit more about that recently since Benzinga, this potential over time, of course, lifting of caps and allowing more consolidation. I guess my question is like, what has to happen? Like on New York, for example, I was asking another tier one CEO on like just the market structure, like every at the retail side, right? Like all the players are going to be limited to 3 stores, not the MSOs, but like the the smaller guys, 3 stores each. It's going to be highly fragmented. And I told the CEO, I was like, how are these stores going to compete? At the end of the day, you're going to just be competing on location. It then becomes a location game, and I just
Well,
businesses that are highly fragmented just don't. It's like the mom and pop restaurant industry, right? Look at the turnover in mom and pop restaurants, and then you have McDonald's and Chipotle. And so I agree that scale is the biggest thing that ensures a company and a sector's success. But these politicians have to learn that. Do you think we're going to have to get to the point where you see the failures first so they learn it, or do you think that they might be more proactive
listen,
in
good,
addressing it?
good producers, good producers will always, small good producers or small good stores will always survive. Listen, I have a lot of friends that are chefs and they have their small restaurants. I will never eat at Chipotle. I won't, but I will go to a small restaurant who has a great chef or has got a great product, a great atmosphere. So there will always be small players. And look at Oklahoma, for instance. There's no MSOs in Oklahoma, but there's thousands of mom and pop stores in Oklahoma. So there are markets where it will work to do that if you provide a good service and a good product. But I'm more talking about these companies that are trying to be MSOs but didn't quite get there, and they didn't get to scale. They borrowed a lot of money. They raised a lot of expensive capital, and there isn't capital available today for them to refinance. Those are the players that I'm talking about that are going to be in the worst shape. Not the small craft grower in California that's the OG that's selling, the best bud with the best terpene profiles, the best, entourage effect. Those are they're going to be there forever because they provide a product that the customer wants. The problem is it's a different phenomenon. It's these mid-tier companies that wanted to go national, become big operators, but didn't quite get there, and the cost of capital has become so high now, and their margins are still so small that they can't, like, maybe Safe will save some of them, but not all of them. So I do think that you're going to see a bunch of the operators, start to have issues. I mean, come on, guys. We have companies out there. I'm not going to name them that have like one store and are valued at 260, 200 or $300 million. I mean, guys, that's just not. There's something wrong with that. There's just, and then we have other companies that are doing really well that are so there's a lot of mispricing in this sector, largely due to the fact that there's a very unsophisticated investor base that's very emotional about investing in these stocks rather than rational about investing in these stocks. And again, that's not a criticism. That's just a phase that this segment has to go through. I mean, how many companies? Curaleaf today trades at like 2 times sales, and it's growing at like 20%. And as new markets open up, it'll have years where it grows 50%. So there isn't a consumer good company in the world of the big ones, and most of them are growing at 2-3% a year, that is valued at 2 times sales. They're all valued at freaking 10 times. I mean, just look at perfect example is this German deal that just happened, right? I mean, BAT valued a company that's a fraction of the size that I bought one at $35 million. They valued it at $200 million. Right. So there's a tremendous amount of interest in the sector. There's a tremendous amount of mispricing in the sector still. And that's part of being in an emerging sector. That's just, and navigating that is very, very difficult. And so that's why I say to people, don't put all your risk capital, don't bet everything on cannabis, and be very careful at the stocks that you pick, and make sure you're picking companies that have good, strong balance sheets and are going to survive what I think potentially, if we don't get safe in December, could be a very difficult first and second quarter. And even if we do get safe, we still have a high inflation environment. We're still in a very deep recession. I think the recession is going to get deeper, and that's also going to put additional pressure on these companies. And so I think the sector's due for a rough ride, and I absolutely am confident there's going to be winners and there's going to be losers in the sector. And as I said, up until now, it's largely been winners, up until, say, a year ago. But now you're starting, I think, to see the difference. That's what's going on. And a lot of you don't know about what's going on in the refinancing markets because you don't see it. It's not public information, at least right now. But I can tell you, I know exactly, and Toby, I think you do too, the cost of capital has gone up dramatically. I mean, dramatically. I mean, I think AYR's bonds are trading at 19.5%. Do I think AYR is that bad of a credit? No. But I'm just saying these are inefficiencies in markets, and that are taking place right now because of the dislocation in the bond market and the Fed's activity. You're starting to see things that are just not normal. And so, for instance, some of these companies, if they have to go raise money right now, lenders are going to say, well, your bonds are trading at 19.5%, or they're trading at 15%. Why are we going to finance you at a lower rate than that?
Right? Yeah, I think I mean, I agree with you. I think that look, institutional. Look, I mean, fortunately, a lot of your company and a lot of the other tier ones, I guess it's fortunate, but you guys raised capital more than a year ago when the stock prices were a lot higher, and you also actually timed your debt deal pretty well, obviously. But I think what's happening since is, and I talked to the family office circle and sort of the ultra high net worth individuals, et cetera. There's a competition for capital in the sector, and a lot of these credit strategies have sort of opened up. I know one credit strategy in particular. I think we know the largest one out there. They've been raising capital at a very fast pace. I'm also involved in the credit side, so I can tell you firsthand, like, yeah, when family offices or high net worth goes to allocate capital now, they can either buy equity or they can buy credit, and the credit's looking pretty juicy. I mean, at some point, obviously, I would tell you, like, you should buy credit in the companies where you feel strongly that the equity is going to work as well, obviously over time. But credit has become a source of competition for capital because, again, there's not a lot of new capital coming into the sector. So that's what I'm seeing is that, obviously, some of these credit providers have raised or are raising capital at a larger rate. But those same credit providers are also telling me, like, yeah, the number of company, like, our loan pipeline is huge, but like the number of companies we're actually willing to lend to has gotten smaller.
Yeah, but I also listen. I look at credit very closely, and I've been looking at one credit portfolio of one lender, one of the largest lenders in the sector, and I can tell you something. I mean, they got nothing good in there, nothing. I mean, and the problem was when the market was competitive, and companies like Curaleaf and Trueleaf were borrowing at 8%. These people didn't want to lend at 8%. They wanted to lend at 10 to 12% or 13%. So they were going down on the risk
Oh,
on the risk table,
yeah.
and so they were lending out to these companies. And what we're seeing now is like, I was looking at this one portfolio that had like Parallel in it and had like other companies. I mean, and I know that these companies can't service that debt. They just can't. It's physically, there's no way they can service the debt. And so what's happening is a lot of these credit portfolios are already in default, but just nobody knows about it because they're trying to negotiate, they're trying to, come up with deals. But a lot of these credit portfolios are already in default in effect. And even if some payments are still being made, they're largely being made because the credit portfolio, the lenders are actually lending them more money just to keep making payments.
Yeah.
So I can tell you right now, there's a lot of distress. There's a lot of distress in what I would call the mid market in cannabis, and I think that distress is only going to get worse. It's not going to get better. And so again, I reiterate: go with the stronger companies, stronger balance sheets, stronger cash flow. I mean, just look at companies like GTI, Curaleaf, Verano, others. We could literally, because we already have large first parties, we could stop capex for 2 quarters, and that's like $100 million right there. You understand that, right? I mean, that's the kind of cash flow these companies have. Like if we stop capex for 2 quarters, we'd be generating an extra $100 million of cash.
Well, and that was a theme from the recent earnings calls from most of these companies is that capex is coming down, partially because there was already a big capex cycle. But I do think, I mean, tell me if you agree with this, like the current environment, I mean, it just makes sense. Like companies are going to be more judicial with where they're allocating capital, and they're also now figuring out like, okay, like New York, like you probably don't know how much you're going to allocate to New York, right? It depends on what you hear back from regulators, right?
Yeah, yeah.
So that is a silver lining to this whole sort of malaise, is that capex is coming down.
But let me tell you something. Listen, the best time to invest, and Toby, you know this because you've been through this as an investor. The best time to invest in business is at the end of their capex cycle, not at the beginning.
Right.
And so right now, a lot of the big MSOs are coming to the end of their capex cycles, right? Certainly Curaleaf is, and I think we've all seen that because, our capex this year would be 150. It's actually going to be about 123 million, and that's because we're really we're coming to the end of that cycle. At least in those states where we're legal and where we operate. We don't need any more capacity. We've built out the capacity. We've still got some stores to build in Florida and Arizona and some other places, but that's pretty small change compared to what we were doing when we were building, 500,000 square foot grow facilities with labs and putting in our ACE extractors and all that kind of stuff. That was very, very heavy capex. But we're coming to the end of that capex cycle. We're also in an environment where cost of capital has become much higher. And so companies are forced to reduce their capex. And I think that for the bigger operators, as we see the distress in this market, I think the bigger operators are going to benefit. I know that's harsh. I know that's terrible, but that's the reality. The bigger operators are going to benefit from the difficulties that the mid and small tier operators are going to have because they have nowhere else to go but to the bigger operators, either for consolidation or for deals and stuff like that. And I can't tell you, we literally see probably 10 to 15 deals a day right now at Curaleaf, but we've made a decision that we think the situation might even get tighter in terms of capital. So we're sitting back and we're just waiting because we think
Yeah.
that, I mean, Germany, we moved on because we had to, because that's going to happen at the end of 23, early 24. We want to be a major player there. So we moved on that. And I think we did a very good deal. I'm certainly proud that I bought a company that BAT would have valued at over 600 million and I bought it for 35. So I'm pretty happy with that deal.
I want to ask you a question on price compression and margin compression. I think for me, one of the narratives in the sector, and I've been having kind of debate about this because I feel like it's a little bit. I understand the reason for it, and I'm not going to dismiss like fundamental challenges like price compression and margin compression. But I've been of the opinion that obviously price compression in many of these markets was inevitable. And I think that and I'm not actually, your company is actually, expanding margins, but, some of the companies had very high margins. It was obvious to me that the margins were too high. But these companies were kind of clinging on to the high margins. And now they've kind of realized, look, like, no, market's gotten more competitive. We need to introduce more mid-tier products, more value products, or we expanded to states with lower margins and the margins are coming down. I think the biggest problem for me is that the investment narrative around this, like, as an investor, like you always want to see margins go up and you always want to see prices go up. But it's almost like the margins, or at least prices, when states legalize, are just artificially high, and they come down over time. And companies, it just depends. Did a company plan for that, or did they not plan for that? Because obviously, I've been sent investment decks on private companies that assume like the price is static over 5, 10 years, and that's just ridiculous. But just I've gotten kind of frustrated on this whole narrative on margin and price compression. I agree that it's real and that it is a fundamental challenge, but I think part of it was just companies or the sector not messaging better to investors that this was going to happen over time. And again, not calling out your company or any company specifically, I just think it's definitely been an overhang on the sector. You obviously get questions on it all the time. What are your thoughts on this whole price margin compression issue?
So listen, I think that there's a couple of things that are playing in that. The first is you can't ignore the elephant in the room, and that is that we are going through the first high inflation environment since the 1980s, and I'm old enough to remember that very well. You know, Jimmy Carter lost the election on the back of that to Ronald Reagan, and Paul Volcker, I think, raised rates as high as 17%. I mean, you know, we're now going crazy here at three and a half to 4%, or I think the Fed's guiding to like a 4.5 to 4.75 percent interest rate. I mean, the Fed funds rate in 1982 was like 17%. Also, we have to recognize that they changed the inflation calculation since then, right? So if you take, I had a friend of mine that took the Fed's inflation calculation from the 1980s and applied to the inflation rate we have now. So if we were using the same formula we were using in the 1980s, our inflation rate is actually 18%. Okay, so I mean, just to put things into perspective. Now they took a lot of things out. You know, the world has changed since the 1980s with technology and stuff. So obviously they had to. But I'm not that level of an economist. I was I studied economics, but I'm not that level to tell you what the changes were. But what I'm saying is that we're in a very, very high inflation environment, and there's no question everybody's downgrading earnings in every consumer goods industry in the country, because the consumer is definitely under pressure. And so I think you're going to see the same thing. We're definitely feeling it in cannabis land. And if anybody tells you they're not, they're full of shit, because there's no question that the consumer is affected. The same consumer that's buying cannabis is buying sneakers, is buying clothing, is buying other things. So, you know, the consumer is under pressure. And this is before people stopped losing jobs. Okay. So I think we're probably due for even more of a difficult period over the next, I would call it, you know, 3 to 9 months probably, until we get control over this inflationary environment. I do think that there's going to be a lot of pressure. The good news, however, the silver lining, before I get into the margin issue on the consumer, is that the consumer, cannabis is becoming a staple. So the consumer is not walking away from cannabis. We haven't seen customers leave. As a matter of fact, we're growing customers. They're just spending less money now, and they're coming in paycheck to paycheck. Rather than coming in twice a month and buying $150 to $200 of cannabis, they're coming in 4 times and buying $80 each time, right? So it's still a little bit less than it was before, but not dramatically less. So we're definitely feeling it, but it's not dramatically less. Like, it's not like our revenues are going to collapse because of the consumer. At least that's not what we're sensing now. Now, on the margin issue, listen, I think every state has its own dynamic on margins. Like, I mean, I told you, New York is the best margin in the industry for Curaleaf. I can only speak here for Curaleaf, because we're literally almost the only player in the state. We've built the infrastructure. We've been there for a long time. Everybody buys our products, so we have great margins, and we're very happy with that business. New Jersey, because of the fact that still very few operators, not enough stores. There's not enough capacity. The demand is high. We've got very high margins in the industry, and the business is growing there. So, but look at Massachusetts. Massachusetts looked like New Jersey, right? What, 5 years ago. But what's happened now in Massachusetts is there's total overcapacity. There's too many growers. There's too many products. The consumer's under pressure. Obviously, margins under pressure, and that's in a situation where the market's still growing. I think actually this quarter is the first time we're going to see a reduction of growth, actually negative growth in Massachusetts. But up until this quarter, Massachusetts was growing, every single quarter for the last 5 years, but we're seeing massive compression of margin because there was unlimited licenses, tons of competition, and there was too much capital in the market that was being given to marginal players. What we're going to see over the next, I think, 6 months in places like Massachusetts, you're going to see more and more of these players. Capital is definitely drying up. You're going to see more and more of these players disappear because they just can't survive. Now, what we're seeing, one thing that's keeping a lot of these players, and I know I'm jumping around a little, but one of the things that's keeping a lot of these players alive is, unfortunately, a lot of the non-public MSOs are not paying taxes. And that's just a fact. They've just stopped paying taxes. And they're like, okay, if they come in and close us down, they close us down. But they're not paying 280E for sure. They're not even paying some of the local taxes. In California, I would say 50% of the market's not even paying the local tax anymore.
Like you mean like they're just ignoring the taxes, or
There,
they're
I can name you 10 companies that they were ignoring it until recently. Now what they're doing is, because they realize they're either going to go to jail or get shut down, they're starting to go to these states and say, can you reschedule us? And they're going on payment programs.
Mm-hmm.
So they're starting to stretch out. And I even know of a couple of deals with the IRS that have happened that way on the federal level as well. So they're starting to stretch out the payments, right? Obviously, none of the MSOs are doing that at this point in time. And I think it would be a pretty negative sign if the MSOs started to do that. Although I think the taxes are egregious, and I think the IRS understands that. But the fact is, it is the law. And I think that, you got to live, you got to build a business model like you can pay your taxes. It might not leave you a lot for net income, but you got to pay your taxes. Curaleaf last year paid like 140 million in taxes. I can tell you that 80% of that was 280. This year our estimated tax payments will probably be around 160 million dollars, 170 million dollars, and 80% of that's going to be 280E. So you can just imagine what will happen to our businesses once 280E is lifted. How the cash flow effect on that and the profitability effect on that. So that's one of the things that's still keeping some of these companies alive. Otherwise, I think you'd see bankruptcies happening much faster. I think the public companies, it's a little bit more difficult for them to do that, although Harborside did reschedule their payments, and I think that was a major achievement and a big positive for the sector. But for the most part, it's private companies, right? Because the IRS can't chase all these small companies all over the country around. They don't have enough resources, and so they're just not paying their taxes. So that's keeping them alive a little bit longer than it would happen if they were a public company. Because if you're a public company, it's much harder not to file your taxes and pay your taxes than it is if you're a private company. And so that's keeping them alive. But overall, I think that the summary of what I would say is that Illinois, Pennsylvania, Massachusetts definitely feeling some level of margin compression. But you also have to put things into perspective. Massachusetts is pretty tough right now, but if you got to put Illinois and Pennsylvania, the margins there are very good still, right? Even though there's some pressure on the market, you're still definitely over 25% EBITDA. I'm not even saying EBITDA margins. You're over 25% EBITDA margin in these markets. And yes, people are complaining because they were earning 35% margins, and now they're earning 25 to 30% margins in these markets. And I don't expect those markets to get much worse, because in Illinois we're about to get 190 new stores over the next 12 months. Maybe not all of them will open, but even if 100 of them open, that's going to be a big wholesale opportunity for the bigger operators. Pennsylvania is likely to go adult use here pretty soon, so that's going to be a big boost for that market. So, I'm not as panicked as everybody else is. There are some markets like Colorado, California, Michigan, Massachusetts, and Nevada that really have major, major problems. It's gotten to the point where, I am seriously looking at whether I even want to be in California at this point in time. And if you were to ask me, one of the things that I missed as I was building Curaleaf, I never thought would happen in California would happen this bad. Like, I never thought the government wasn't going to enforce the illicit market. The price compression that happened in California. Nobody in California is making money. Nobody. And if they're telling you they're making money, they're lying. And so, and the point right now is, I'm not seeing Californian authorities try to fix this problem. That's my problem, right? Is this, if they really wanted to fix it, and the real issue, the reason California isn't doing it, and I do think they will fix it, and I'll explain why. But the reason California is not enforcing, Michigan's not enforcing, Colorado's not enforcing, a lot of these states are not enforcing the illicit markets, is because they got bailed out with the $1.3 trillion package in the first year of the Biden administration, right? They all had massive budget deficits. barring I think California, but the others all had massive budget deficits, and all those budget deficits, Illinois, Pennsylvania's, New York's, New Jersey, it all got filled by that $1.3 billion package. So they filled their budget deficits. Now they're sitting pretty well. But what's going to happen this year? California's going to get hit because what is it? I think it's 1% of the California market represents 1% of the population represents like 90% of the taxes, and I believe of that it's like 80% of that is capital gains taxes that fund the California budget. I may have those numbers wrong, Toby, but it's something like that. And obviously, there's going to be no capital gains this year, or very few, on the tech sector. You got companies fleeing, so I do think California is going to come under tremendous budgetary pressure over the next year or two. That's going to force them to have to fix the problem in California. Right, they're going to have to fix it because they're not getting any revenues from this industry in California today. I think that's going to force Colorado, that's going to force Massachusetts to start enforcing the illicit market, and then I think you're going to start getting margins are going to start coming back in those markets. So yes, there's some pressure on margins, but we don't have the same problem that Canada had. Our markets are not overbuilt; they're just not. Some of them might have a little, like Massachusetts may have a little bit more than it needs to, but I believe that if there was proper enforcement of the illicit market, that the markets are still much bigger than the capacity that's available. The problem is there's no enforcement on the illicit side, and this doesn't happen overnight. It takes time. I mean, alcohol. I think it took like 30 years for them to close down most of the illegal moonshiners that were making alcohol all over the country after prohibition. So obviously it'll happen faster with cannabis because we've moved on in technology and finding where these guys are and how they're operating. And I think the tax pressures are going to force these governments to clamp down on the illicit activity. And so I'm pretty bullish that over time we're going to see a lot of these margins come back. And generally, I don't think they're all that bad at this point in time. I'm listen, I think this industry at 25 to 30% EBITDA margins. I mean, that's where most of the consumer industries lie. I think those are good numbers, especially if you're growing at 20-25% a year, right?
Yeah, I guess look, we've been going on for a while. What else again, I kind of didn't plan to have you on. I obviously would have prepped some questions, but I always kind of wing these things anyways. But what else again, like it's been noisy. Obviously, I was at Benzinga. I agree with you. I think I caught your keynote and you were like, what'd you say? It's people are looking tired out there, and it's not just because they were at the nightclub the night before. like like there's a lot of noise in this sector. What I always tell people, and I just spoke to one of your shareholders, on the institutional side, like for 2 hours this afternoon. I check in with him like once a quarter or something like that. So I didn't have time to prep for this, but we both just kind of said, look, it's just a lot of noise, and again, it goes back to the relation of like, you're building a company in a sector. There's a lot of unknowns, obviously, on how things are going to play out. I always say, especially in cannabis, like you guys are building the plane while you already got the plane off the ground, but you're still building it, right? And so there's a lot of noise out there. There's a lot of and Twitter. I think Twitter is a great resource. I use Twitter a lot for my real estate stuff, but it is noisy out there, and price sets narrative sometimes. Like things are just all over the place. It's gotten really noisy. What else do you want to? What other message?
So the
the
message because I got to finish up as well. The main message I want to send is that this has been a very difficult sector for all investors involved, including myself, guys. I'm probably the biggest investor globally in cannabis. I have over 800 million between, Curaleaf and my VC fund and a lot of the debt that I've lent out allocated to this industry. So there's no person probably in the world that wants the sector to succeed like me. But the reason I allocated it is because I'm a huge believer in it still, and I'm not a trader, and I know that I will get paid, and when I get paid, it'll be a very, very big payout on this industry. I'm absolutely confident because the genie's out of the bottle. So, I'm not telling anyone to invest more. I'm just saying I believe the opportunity in the sector remains as big as it was when we all originally invested in the sector. I think more and more countries and more places are opening up to cannabis, and so I just think that listen, just hold on, don't bet your whole ranch on it, but I think this is going to be a major sector. And I honestly believe, I think most investors will get paid very well. I've seen this in emerging markets before, where people like in the Russian emerging market for 10 years, people weren't making any money. And then all of a sudden, everybody in 2 years got paid 20, 30 times their capital. So that's the kind of thing that I'm fully expecting will happen in the cannabis world. And in the meantime, I always want to make this rational so people understand. We took Curaleaf public in 2018 because I think this is a very, very good analogy. We took public at a 4 billion pre-money market cap. We were doing $70 million in revenue. This year we'll do around $1.4 billion in revenue. Okay, that's 4 years later, and we're trading at a $3.6 billion market cap. Okay, so look at the growth. Where else in the world have you seen an industry grow the way mine has the cannabis industry grown, or use Curaleaf as an example of that industry, and the market cap in that business has actually shrunk. That's called inefficiency and plumbing problems. That will get rectified. The question is when. I'm bullish it'll happen soon. Other people think it'll happen later, but I'm keeping my head down and working.
Hey, and I hate to end on sort of a negative question, but look, with the stocks where they are, with the MSOS ETF where it is, like, obviously, I think like the reason people are scared to buy right now, right, is like, they feel like they're catching a falling knife. Like these stocks could go lower. And look, we agree the market's massively inefficient. So who knows what the stock's going to trade over the next 2 weeks? Like anything can happen. I totally understand that. But what's your confidence level in the larger companies being able to weather the storm, even if the consumer environment gets worse, even if some of these markets get worse? I would think with capex coming down, that obviously helps. But what's your level of confidence in these companies weathering the storm and not needing to like issue more equity here, et cetera?
Listen, I'm very proud of the top five, and I don't really know the other CEOs as well. I talked to all the top five MSOs. I'm very proud of the CEOs we have in the sector. I think they're all very, very bright. They work super hard. I mean, I was shocked at Benzinga when I arrived at Benzinga. I looked at all these guys, and they're starting to look more like me, like a gray-haired guy that's slightly hunched over. And when I got involved in the sector, they all looked like they were my kids. So I can tell you they're all working really, really hard. They're all really, really smart, and they know what they're doing. And I think what you're going to see in the next earnings calls is a more profound message that we're focusing on cash. And that's a big thing coming from me because you know me, Toby. I'm a growth guy. But I'm focused on cash for two reasons. One is I see the macro, and I don't want to come back to the markets at these prices ever, right? Not on equity, not on debt. And so for that reason, I think all of us are going to slow capex, and all of us are going to slow acquisitions for the time being, and we're going to focus on what we got. And the good news is the top five can do that because we've all got giant national platforms, and in the case of Curaleaf, already a big giant international platform as well. And that's not to say we're going to completely stop capex. Don't get me wrong. We're going to continue to grow, but we're going to really bring down sort of that aggressive focus on growth. I think is be brought down because it's the prudent thing to do in this macro environment where capital costs are so high. And so I think you're going to hear that message from everybody. People are going to focus on margin. People are going to focus on and again, the whole idea of net income profitability is garbage in the sector because our we have 280E, we have massive amortization, depreciation. So I think people really got to stop looking at net income because net income is a bad indicator in an industry like this at this early stage of our industry. The best indicator is actually EBITDA and cash conversion, cash flow and EBITDA, right? How much cash are you converting from your EBITDA number and what your margin looks like? And I think I think that this is going to be a phenomenon for the next 2 to 3 quarters. And that could change if we get safe, because if we get safe, the big operator cost of capital probably drop back down to where it was a year ago. And obviously we could raise and to continue our growth strategies. But right now, I think nobody wants to raise in this environment. Nobody wants to, some people have to because they have refinancings that they have to do because their timing is unfortunate. It's not their fault, but it's just the unfortunate aspect that their loans are coming due, so they have to. So you'll see some very deals that are going to be very expensive. But for a lot of the companies, we refinanced ourselves earlier this year. We got very good, and I'm not saying we were geniuses. I think that's partially luck. But we were able to refinance. We took advantage of the markets. We refinanced ourselves. Our balance sheets are strong. We can focus on cash flow right now by reducing our capex and try to become more efficient. I mean, the message I sent to my team at Curaleaf, I said, let's use this as an opportunity to really increase productivity. Let's just become best in class in what we do. And that's the message I sent. Let's do that. In many ways, it's a nice thing. We can take a breather from buying businesses. We can focus on being best in breed in what we do and operating efficiencies. And then 3 quarters from now, as we start coming out of the recession, as cost of capital starts dropping, we can resume growth. And I think that's the message that I would give. At least I think that's what the top 5 at least are going to be doing.
Yeah. I mean, no, it's very prudent. And for what it's worth, I think that will resonate well with investors. I think people recognize this is a growth sector longer term. I think people are extrapolating the near term numbers. And look, of course, we're in a recession. I've always kind of argued the COVID trends and the stimulus checks kind of juiced the growth as well. And, it's created tough comps. And, I still firmly believe this is a growth sector. So my message to the companies, and I've told you this, is I don't want to see free cash flow being maximized, but obviously in the current environment, I know other investors are just very focused on cash. So I think showing some level of cash flow, just small amount of cash flow generation, being able to prove out the business model, it just massively divides your company and others from the rest of the industry. And I think that's what investors obviously want to see. So I think that will resonate very well with people.
Yeah, and I think that's the message it's going to have. Listen, Toby, I'd love to continue, but I got
Yeah.
family that wants to see me. And I want to reiterate to everybody, guys, thank you for the support. Those are investors in the sector. Those are investors in Curaleaf. And Toby, the education you give the sector and the insight you give it, I think is super important for retail. Because unfortunately, retail doesn't get the benefit of a lot of the research that institutions get. And although it's getting better, they don't get the benefit. Sometimes they don't have time because they have 2 or 3 jobs. So what you're doing on space is super, super important. And thank you.
Yeah, I appreciate that. Okay, great. Thanks,
Okay,
Boris.
thanks. Bye.
All right, bye. So I actually got to end it here as well.